Hi, everyone. Welcome to another IG Live. I'm so excited for you to be here. My name is Janice Torres Rodriguez, and I'm the host of Quiero, Dinero, the podcast, personal finance podcast for Latinas about money. So, welcome. We're going to get this show on the road. Hello. All right. I'm so excited. Today we're going to be talking about all things credit, which credit for me was a very scary, stressful thing growing up.
There she is.
And our guest is on. Hi, Carlos. How are you?
Hi, doing great. Glad to be here. How are you?
I'm good. All right. Let me put up this little graphic that I put together. Okay. All right. So, Carlos, how are you?
Oh, I'm good. I'm busy. Lots
Yes.
going on. We had a really big week with lots of big stuff going on at the company, but I'm really excited to be here talking to you.
That's awesome. I'm so excited to hear what you've been up to since our conversation. For anybody who doesn't know, Carlos was actually on our podcast on episode 27. And we talked all about his business, how he left a career on Wall Street to start Crediverso, which is amazing. And I want to get into all of that. And then we're also going to talk about credit and why you should care. I know for me, when I was growing up, I didn't learn necessarily about why credit was important. My parents just told me, like, if you ruin your credit, you're essentially ruining your life. So never get a credit card and like don't do anything of what we did. And I'm just like, okay, that's great. Like, Latino parents are so into like just scaring the crap out of you in order to teach you a lesson, but they don't go deep enough into, okay, like why should you not mess it up? Like, what does it actually mean? So I think when I first got my first credit card first, my parents didn't know because I was like, they told me never to get a credit card, so I can't tell them. Um, but then I was like really intimidated by just even the thought of using it. And it wasn't until I got older that I realized, okay, like credit's not evil, but you have to understand how it works, or it definitely can like mess up a lot of stuff for you, right?
You're totally right, and there's so many misconceptions about it, and I'm really glad that we're getting these personal finance topics out into the open because it can be a really helpful thing. At the same time, it can be a very harmful thing. It's all about how you use it. Like anything else, it's a tool. You know, if you take a hammer and you use it correctly to hit a nail in, that's great. You can build a house. But if you miss and hit your finger, something bad's gonna happen. So that's the kind of the way I think about credit cards and loans and debt.
Absolutely. So, guys, for anybody who's on, while you're listening to our conversation, you have any questions, just go ahead and pop them into the Q&A section. It's the little icon with the question mark on it, and we'll make sure to answer as many questions as we can while we're here. So, why don't we start off with you introducing yourself and telling us about your journey to building your business?
Absolutely, I'd love to. So my name is Carlos Hernandez. I am the CEO and founder of Crediverso.com, which is the nation's first online financial products marketplace that is dedicated towards the Latino community. So what that means is that we are the only place where you can go and compare credit cards and loans and credit checks and ways to send money internationally in Spanish with content that is written in a way that is designed by and for the Latino audience. We will be the first place in the country where you can get a credit check in Spanish, which is pretty unbelievable.
Wow.
It is 2020 and that isn't available yet. And you know, I think this is exciting to me because it helps me carry out a long-standing personal mission of being involved with the Latino community. You know, I grew up in a Mexican household in Los Angeles. My mother came from Mexico to come to college over here. My dad grew up in East LA. He was the son of a cop, and it's important to me to bring access to financial products to the Latino community, especially since, you know, as I see it, and I've spent a lot of time looking at this stuff, the big financial institutions in the country just do not seem to address this part of the population very well. And, you know, as you know, Janice, it's a 60 million person population, 20% of the country, and the typical financial institution spends less than 1% of their marketing budget on reaching the Latino community. So that's what Crediverso is all about trying to fix. And I'm really excited to be talking about it here with you.
That's such a shocking statistic. I mean, to ignore 20% of the population is just mind-blowing to me. And I wonder like how much of that just comes from maybe, I don't think it's intentional, but I think there is a level of ignorance around like the fact that Latinos are unique in, you know, how you have to approach them from a marketing perspective. We have so many unique burdens and struggles when it comes to like understanding finances and building wealth. And I feel like we just kind of get lumped in with like every other minority as if like we all have the same thing in common. So it's kind of frustrating, but I'm so happy about what you're doing. I think it's so necessary. So I want you to tell us like what inspired you to do this, because obviously a lot of the facts are out there. We are being chronically underserved with personal finance literacy and just by financial services in general. So what is it about your story that really said, you know what, I need to get involved in a deeper way?
Yeah, thank you for asking that. And you're right. You know, it is a very personal thing, having grown up in this community and seen firsthand how access to information, access to financial products, understanding how to use a credit card and how to get a loan. Those are all things that I've seen, you know, and heard personal stories of. And as I said, you know, they're tools. And if you use them correctly, those stories go really, really well. And if you don't, those stories go really, really poorly. So, you know, I think a couple that were very obvious to me is that one, I had an aunt who lived down in Mexico and she moved to the United States. And one of the first things that she did is reached out to me and said, "Hey, I need to get a credit card in the States. What's the best way for me to do that?" And I thought, okay, that's pretty simple. Getting a credit card. You know, I see these advertisements all the time. See them on TV. They're all in English, but I didn't think that was going to be a problem. Let me help her out. And so did a quick Google search, and I realized that not a single one of these websites is available in Spanish. So I said, okay, you know, it's not like I can just send her a link. I thought this was going to be an easy 15-minute thing, and it's not.
Wow.
And then just more stories like that, you know, where somebody wants to go to college but doesn't know how to get a student loan. And there are people in my family who have had that experience. Someone who wants to start a business and doesn't know how to apply for or get a small business loan. It's something that is pervasive, and I think a real problem that needs to be addressed in the U.S. And, you know, it's because this is a community that I'm a part of and that many of our team members are parts of, be it from the Mexican American community, from the Dominican community, Cuban, Puerto Rican, whatever it is. You know, we are all one big community, and solving that problem together is, I think, why we're all passionate about being on this team.
I love that. Oh my gosh. Okay. So let's get into today's discussion because we're going to be talking about all things credit. And so the first question I have for you is, can you break down the different types of credit that exist? I don't think people realize that there are different types.
I love that question. And it's totally right, because that is such a loaded term, credit. It can mean so many different things. And it's like any of these financial terms, they seem very complex and they're like almost too much to handle. But when you start to break them down, it's actually, they end up being a lot simpler than they might seem at first. So different types of credit. The way I think about it is there are three. There's a revolving credit or revolver loan. There's installment credit, and there's open credit. So let's talk about the first one first, revolving credit. So that is generally what you're going to see. Where you're going to see that is a credit card. You also see it in a home equity line of credit, which is called a HELOC, but that's a little more complicated. We don't need to think about that. So the revolving credit line basically means that you can borrow from it whenever you want. It has a cap, which is called the credit limit, and that's how much you can borrow to. It requires monthly payments, and it charges you interest if you carry a balance on it. So that's the main type of credit that I think most people are familiar with, and that's, again, revolving credit. You see it mostly with credit cards. The second type is called installment credit. And so installment credit, where you see that, is places like student loans, mortgages, auto loans, personal loans. And really all that means is it is a loan of a set amount of money with a fixed, regularly occurring payment schedule. So anybody who's had a student loan will know that you take out a certain amount, you have to pay back a certain amount every month. Again, fancy term, but it's a pretty simple concept. And then the third type is called open credit. And so what open credit is an account that you can borrow from up to a maximum amount, like a credit card, but which must also be paid back in full every month. So that's, you know, it's less common, but the way to think about that is you generally see it with a charge card. So it's not a credit card where you have revolving credit, but you essentially can charge up to a certain amount and you have to pay it back every single month. You can't carry a balance the way you can with a revolving credit line. So again, revolving credit, installment credit, open credit. The major ones are revolving credit for credit cards and installment credit for things like student loans and mortgages.
Got it. Okay, that's great. So open credit also can be like your utility, right? Like your utility company gives you a certain amount of leeway. Because I know when I opened my, I think it was my water account with the city, they actually had me put a deposit on my account to make sure that like if if I ever defaulted on the utility, they could take that deposit to pay for it. So you can think about it like that, as well as like your cell phone companies, right? Cell phone companies, those contracts are sort of like an open credit situation. So
Yeah.
there's a question on here that says, why would I want an open credit versus revolving credit? So I don't think you want one or the other, right? It's kind of like, in order to have the best credit profile, you should have a scattering of different types of accounts. You should have some revolving accounts, you should have one or more installment accounts, and maybe you have an open credit account depending on, what services you're using.
Yeah, that's a great answer. And I think the only thing I'd add to it, and we'll probably get to this a little bit more when we talk about ways to improve credit for people who have broken or damaged credit, is that sometimes that's the only type of credit that you can get access to is an open credit. And that can be a very good place to start if you want to start building up your credit, but maybe the only credit cards you would have gotten are really, high interest rate, high annual fee cards.
Awesome. Okay, great. So next up, what exactly is a credit score? It's this magical number, right? And there's like so many ways to calculate it. I know I've gotten like my credit score on Credit Karma, but then I've gone to like get a car loan and the numbers don't match, and it's all so very confusing. So what exactly does this score represent and what affects it?
Very, very good question. And I'm really glad we're talking about this because, again, it's something that is mystified with all this fancy terminology. And again, it's just, we can break it down and it's really easy to understand. So a credit score is basically, it's a number between 300 and 850 that tells lenders how likely it is that you are going to pay back the money that they lend you. That's all it is. If you're loaning money to a friend and somebody says, oh, they're going to pay you back, and, you ask a friend, they say, yeah, I'd probably pay you back. That's the equivalent of having a good credit score. So it's based off of your entire history of taking out loans and paying them back. And so that can be any type of the loan that we just talked about, the credit cards, the mortgages, the personal loans, the student loans. But the way it plays out, and the reason why you probably saw two different numbers as you were looking at, I think you said Credit Karma, and then when you apply for your auto loan, is that there are three different major credit scoring bureaus in the US, Experian, TransUnion, and Equifax. And they are responsible for gathering information and assigning you a credit score. Now, the most commonly used type of score is called a FICO score. It comes from the name of a company called Fair Isaac Company. You don't need to worry about that. Basically, that's the one that you're going to end up seeing for most loan applications. But you actually can get what's called the Vantage score also, which in many cases is cheaper. It's free from some providers. And it is not the same exact stuff that goes into a FICO score, but it serves the same purpose, and most lenders will accept it as well. So either one you're going to be fine getting, but some places will be sticklers and ask for a FICO score. So the thing I want to clarify is that people will ask, what is the difference between a credit score, a credit report, and a credit check? So a credit report is simply the record of the information that all these companies that I just mentioned gather. It has all the credit history information that they use to compile your credit score. And then lastly, a credit check is a service that tells you what your credit score is. So again, some of these services are totally free. Some of them charge you money, but then we'll give you some extra information or help, things like fraud watch, identity alerts, things like that. And the way I try to get a handle on these, not to publicize our platform, but we have a credit check marketplace where you can go on and see all the top providers, how much they charge, what services you get with them, which ones are free, et cetera. So it just makes it all really transparent and easy to use.
That's awesome. And so what are the things that affect your credit score?
Very good. You've got good questions. That's why I like talking to you. The credit bureaus, the three I mentioned, they will generally look at 5 pieces of your credit history to determine your credit score. So let me go through them in order of importance. Number 1 is your payment history. That accounts for 35% of what goes into your credit score. And payment history, that one's pretty easy to understand. Basically, it's whether you pay your bills on time. For example, do you pay your credit card bills on time every month, or are you late sometimes? If you're frequently late on payments, it could probably hurt your credit score a little bit. So payment history, number 1, worth 35%. Number 2, total amount that you owe. That's worth 30%. So also a very big component of your credit score. And all that refers to is how much of your available credit are you using. So if you have a credit line of $1,000 on your credit card and your balance is $500, then you're using half of your available credit. And what the fancy term for that, they call it credit utilization ratio, and all it means is a percent. So again, credit limit of 1,000, balance of 500, that's to half of it, so your credit utilization rate would be 50%. The reason why that's important is that if that number gets too high, then it can start to negatively impact your score. So far we have payment history and total amount of. The third one is length of credit history. Okay, so again, that one is pretty straightforward. Basically, it's asking about how long you have been borrowing money. So if you got your first credit card last month, your credit score is probably going to be a little bit lower because the lender just doesn't have that much information on you on whether you're going to pay back the loan that you borrowed from them. But if you've had credit cards for years, a lender can see that you've always paid your bills on time, you're a pretty trustworthy person, and they'll be willing to give you a higher credit score and lend you more money. All right, so that was number 3. Number 4 is worth 10%, and that's the different types of credit. So you actually mentioned this a few moments ago in regards to the question about whether you wanted to take out open credit. So this refers to whether you have taken out different types of loans. So if you have a car loan, a mortgage, a credit card, that shows lenders that no matter what, you can pay your bills on time, even if it's different bills coming from different places. That's worth 10%. The last one is called new credit, and that's worth 10% also. So what that means is, have you taken out a lot of new loans recently? So if you open up too many new credit cards, it could hurt your credit score basically in 2 ways. First is that it makes your average length of credit history lower. Remember, we talked about how your length of credit history factors into this. And so if you have a bunch of credit cards you just opened a month ago, then your average length is going to be a lot lower. Then second, it can hurt your score if the lender performs a what's called a hard credit check, which happens every time you apply for a credit score. Every time you apply for a credit card. So a hard credit check, and this is another question I think people come across a lot. What you need it almost all the time to apply for a loan, a credit card, anything like that. And people are concerned that it will hurt your credit score. The guidance that they tell us is that it's a negligible impact on your credit score and actually can very quickly be offset by making your first few payments on that credit card on time. So don't worry about that too much if you're applying for a new credit card. What I'd say is if you're trying to figure out which cards you are eligible for, rather than applying for a bunch of new cards and getting that hard credit check on every single one of them, get pre-qualified, which you can do on our site. And that'll tell you which cards you will most likely be approved for, and it will only do a soft credit check on each one. And the soft credit check doesn't have a negative impact on your score.
That's fantastic. So I saw a question come through. How do we get rid of hard inquiries? And I can take a stab at that. So
Sure.
You don't actually get rid of them like proactively. Essentially what happens is that you have to wait them out. So they stay on your report for 2 years. And then after that, they fall off. So the objective when it comes to, like Carlos said, it's not the biggest part of your credit score. So don't be too caught up in like racking up 1 or 2 hard inquiries. But if you find yourself applying for a lot of different lines of credit within the same like 30-day period, I believe that they all can get lumped into as one inquiry versus a bunch of them. And I remember my mortgage lender telling me this when I was shopping around for mortgages. She said, as long as you're doing the inquiries within a certain amount of time, they don't get added as single credit checks. I'm not sure how true that is, though.
There's unfortunately not a lot of clarity into exactly how that gets calculated. So the best thing to do is try to decide beforehand what type of loan you want, which provider you think you'll be qualified for. In many cases, they will give you a pre-approval option where you can submit your credit score. Generally, you can do it in the same place, and they'll take your credit score, tell you whether you're likely to be approved. You can figure out which ones are the best for you, and we can talk about what you should be looking for, in regards to a loan or a credit card, to figure out the best one for you. But if you make those decisions up front, then you don't have to, I've heard from some places that they will lump them all together. Some people say, if you wait, too long, they'll count at different ones. Either way, it's negligible, and either way, you can overcome it. It's not a very, very small part of what's going to impact your credit score, but better to avoid it if you can.
Mm-hmm. Okay. So we have another question here. How many credit cards should I get, and how often should I use them to have a healthy credit score?
It's a good one. So the way I like to think about that is that there really is no limit on how many credit cards you can or should have, but there are things to think about as you get each new credit card that will impact your credit score. So, the number one thing I think, let me see, number one and number two, most important. Number one is, are you going to be paying annual fees for those credit cards? Because if you're paying an annual fee of $50, $95, $400 for every one of those credit cards, those things add up fast.
Mm-hmm.
And before you know it, you're going to be paying $1,000 just in annual fees just to have those things sit in your wallet. And that doesn't make sense.
Right.
Number one. Number two is, can you, are you organized enough? And I speak from personal experience. Are you organized enough to pay off those bills in time every month? If you have a little balance on every single one, then that's a bunch of different cards to keep track of what the balance is, what the interest rate is. And every time you keep those balances on over the payment period, you have to pay that interest rate. So being able to keep track of those balances and when the bills are due is, I think, the second most important thing. Now, that all said, how many should you have? And how much should you be spending on them? How much should you be using them? Like I said, there is no limit other than those main considerations. If you have a bunch of no annual fee cards and you're keeping track of your balance, then you can have a bunch of cards. And Janice, I've seen what's in your wallet, and you are fantastic.
Thank you.
Having a card that works for, one card that gives you cash back on dining, one card that gives you cash back on Amazon spend, a balance transfer card, a card that you use when you travel. You and I are personal finance junkies, and so we're good at taking advantage of those credit cards. Some people just want, one card that gives you a flat cash back rate on everything, and it's a lot easier. But in terms of how much you should be spending on them, basically what I try to point people to here is, again, that credit utilization ratio. So if you can carry a very low credit on, or a very low balance on your credit cards pretty much all the time, number one, you're not going to have to pay interest, so who cares what the APR is because you're not paying it anyway. And number two, you have a really, really low credit utilization rate, which is going to bump your credit score up. So those are all very good things.
Awesome. There's so many hearts coming through, Carlos. I think people are absolutely loving this information. So let's keep it going. All right. So a question that I get a lot, and there are so many scams out there. So I'm very hesitant to tell people to contact a specific agency or a company to help them with this issue. So can we talk about how people with no credit or bad credit can fix it?
Yeah, and I love your approach, honestly. I think that is the Latino approach, right? Is, let me do this myself.
Yeah.
And I think it's totally possible here, which is the great thing. So, if you have bad credit, maybe you took out a credit card in college or something, or missed a few payments, it's not a problem. Or if you have no credit, a lot of folks, in our community maybe just moved to the country and, don't have a social security number or a long credit history. There are a lot of ways to do it. So the place that I typically like to start, and again, this is something that you can totally do on your own, you don't need anybody's help to do, is getting a secured card. So a secured credit card is a type of credit card for people with limited or damaged credit, like I described, that requires the user to place a refundable deposit that they call security deposit. And basically the card issuer holds that as collateral until the account is closed. So it's basically, you take something of value, which is the deposit, you give it to them the whole time that you're using the card. You can, that's basically the amount of money that they let you borrow up to. And the reason why that's important for them is that at that point, you've given them something to hold on to, so they don't care what your credit score is, if you have one, if you don't, because they know that at the end of the day, if you don't pay them back, they just hold on to the thing that you gave them. And it's very easy for them to then loan to you. So like I said, it makes it less risky for whether it's a bank or credit union to issue that credit card to you, because they just keep the money if something goes wrong, or if you're inexperienced and you missed that payment date. So
Right.
The benefit for people who don't have great credit scores or credit histories is that secured cards, you're pretty much always going to get approved for them. And so they're really easy to access. They don't charge, well, actually, let me circle back to that in a second as to why that's better for an unsecured credit card. So the reason why you want to use these is that basically they're, for all intents and purposes, indistinguishable from unsecured credit cards on credit reports. So all the secured cards will report to the major credit bureaus on a monthly basis. And as long as you're making your payments on time, your credit score is going to improve, as if you had another credit card that maybe was more expensive and you're making your payments on there. The reason why I think for people with damaged credit, secured cards are better than unsecured credit cards. An unsecured credit card is just a regular credit card. A secured card is better because if you have really bad credit, the only regular credit cards that you'll have access to are ones that have super high interest rates and super high annual fees. With a secured card, you don't need to worry about that as much, because for the annual fee, most of them are not going to charge you an annual fee because, like I said, they're keeping that security deposit. For the interest rates, and this is really important here, so I'm gonna focus on this point. If you're getting a secured card, do not keep a balance, because if you are keeping a balance on your card, then they're going to charge you the interest rate. The interest rate's going to be high, and you're effectively paying them interest to borrow money that you're loaning yourself. Because remember, you gave them that security deposit, and that's the amount that you can borrow up to. So don't carry a balance on it. Pay your bills in time. Hold on to that secured card for a year, and you're going to have a much better credit score and be able to access a really good credit card.
That's great information. Oh my gosh. Okay, so many questions coming through. So one is, how do you know if a credit repair service is legit or a scam? And so I always direct people to nfcc.org. So the NFCC is the National Foundation for Credit Counseling, and they're a nonprofit organization that can direct you to a credit counselor that can help you set up a plan and figure out how to repair your credit. So unless you're going through an agency that's nonprofit, I wouldn't trust it. Just because, there's so many people that are like preying on our community, especially, and let's just not subject ourselves to that. So definitely go to nfcc.org to find out more information about how you can utilize their services. Now, the next question is, can you request the money from the secured credit card if you've had the credit card for years and it's in good standing? I don't know the answer to that.
That's a really, really good point. And I'm glad whoever the user listener was that mentioned that.
Guardadito. Thank you for your question.
Gracias. So the way I think about that one is that if you've had your secured credit card for a year, okay, remember one of the things earlier that I mentioned is that a contributor to your credit score is how long, the length of credit history. So you don't want to get rid of that secured card after a year just because you now have access to better credit cards, because then you lose out on that year of having, being able to show lenders that you've been borrowing money and paying it back for that whole year. So what you can do is you can call your secured card company, the issuer, and say, I'm ready to move into a credit card. I think my credit score has gone up, and they'll be able to tell you whether you are or you're not. And basically roll that secured card into an unsecured card. So they'll give you back your security deposit. They'll take you into an unsecured card, which is a normal credit card. You're no longer in the secured card camp. You get to keep that whole year of credit history, and now the terms are probably going to be a lot better because to them, you've showed for a year that you've been able to pay back all your stuff, and you're just a better, you're more likely to continue paying things back. So you can probably get a lower APR. Maybe now you don't need to focus so much on whether you're keeping a balance. You can get you probably didn't have an annual fee with that secured card, but maybe you can get an annual fee that's lower than some other unsecured cards. So all in all, that's a really good option.
Good. All right. So someone wrote, Best Buy decreased my limit and my score dropped 100 points. How? Okay, so there's a couple different reasons why this could have happened. First, they probably decreased your credit limit for one of two reasons. Maybe you're not using the card, and they just figure if you have a big credit limit, they're like, why are we giving this credit limit to somebody who's not even using the card? But more than likely, it's the bank that issued the card is probably dealing with a lot of credit defaults, or they're stressed out about COVID, and they have anxiety about having these big credit limits. And so they're reducing their risk by lowering credit limits. And then as to why your score dropped, I'm guessing it's probably because your overall credit limit has decreased. And if you're carrying balances on other card, that automatically made your utilization score go up, right? So your percentage of utilization has gone up because you have less of a credit limit. That's just my guess without knowing too much more about the situation.
No, that's absolutely right. And, maybe they have an idea why Best Buy did that. But to your point about the credit utilization rate too, yeah, I try not to do math in public because it usually requires on me. But the easy way I think about it is, okay, say you have two credit cards, okay? You have one that has a $1,000 credit limit and the other one has $1,000 credit limit. On this one, you have a balance of $500. On this one, you have a balance of $0. Okay. Now, right now, with all of these cards combined, the outstanding balance you have across two of them, you have a $2,000 credit limit across both of them and only $500 of balance. So that's 25% credit utilization ratio. If you cancel this one that has the high limit and no balance, all of a sudden now you have one card with 50% credit utilization ratio. So your credit utilization ratio just doubled. and that's going to have an impact on your credit score. It's worth, was it 30%? Yeah, 30% of your credit score. So that's probably what happened, as you were saying, Denise.
Yeah, that's major. Okay, so what are some things that we should be looking for with regards to rates, keywords maybe when we're applying for new credit cards? Like, how do you even choose what makes sense for you?
I've spent a lot of time thinking about this recently as we've been working on a feature on Crediverso.com that basically answers these questions for all of our users. So it can get pretty complicated, but there's a way to simplify it. What I'd say is that the easiest thing to do is probably within 2 weeks or so, we're going to have this feature live, and you can go on and ask you all the right questions and point you in the right direction. So, I like to think about it as, are you looking for first a personal card or a business card? That's a decision that you make. Once you know you're saying, okay, this is a card for me, then you go into the next camp. And are these, are you looking for a card that is important for building or rebuilding your credit score? Are you looking for a card with big rewards? Are you looking for a card to do a balance transfer? Once you pick each one of those, then you kind of go into a different set of decision points. I think because if you're trying to figure all that out on your own, it can get complicated. I try to let us do the homework for you, and trust me, you should see the stacks and stacks of paper we have on this stuff. We've done a lot of the work for you. Don't focus on all of that just quite yet. I'd say the things to think about: annual fee, how much they charge you every year; APR, what's the interest rate. That may not matter if you're not planning on keeping a balance on your card. Does it charge you a foreign exchange rate? If you're somebody who travels, foreign exchange fee. If you're somebody who travels a lot, maybe you're down in Mexico, Guatemala, wherever, visiting family frequently, and you're getting charged 2, 3, 4, 5% every single time you make a transaction down there. That's something you want to avoid. If you care about points, does it give you any points? If you care about cash back, what kind of cash back rewards does it give you? Generally, 2% and above is pretty good, but it can vary based on category. So make sure that you're picking the cards that have the categories that align with what you spend on. So if you spend a ton of money on groceries and gas every month or every week, then pick the ones that give you cash back for groceries and gas. It makes sense. I think the last thing I'd say is that as you're comparing APRs, you probably want to be aware of what a good APR is. That's a question that I get a lot. And what a good APR is depends on what your credit history looks like in your profile as somebody that they're lending money to, and the type of card that you're getting. So if I think last year, the average APR across all credit cards was about 19.3%, right around there. But if you get down into the neighborhood of, say you have excellent credit, then you're probably down below 15%. If you have good credit, it gets a little higher, 21%. If you have fair credit, 23.5%. If you're looking at secured cards, like we mentioned, don't ever hold a balance on a secured card, 20%. It's not that bad, but again, you're paying interest to borrow money from yourself.
Absolutely.
Student cards can be pretty good. They had typical interest rates about 18%. Business cards, 18.5%. So the average is something to look at, but my advice is if you can get away with it, keep that balance to zero as long as you can.
Yeah, absolutely. I want to jump back into the rebuilding of bad credit, because I actually did something to help my husband. He defaulted on a student loan when he was 22 years old, and as a result, that shot his credit down to hell. So one of the things that we did is that I've always had good credit, so I actually put him as an authorized user on my cards. So I didn't actually give him the credit card to use, but I put him as an authorized user on my account, so he could essentially leech off of my fabulous credit. And it did a great job to fix his credit. Now, it takes time. It's not a magic pill. And if you're on the receiving end, make sure that that person that is offering to put you as an authorized user has a legit track record of having good credit, because the last thing you want is for them to potentially run into some type of financial emergency that ends up ruining their credit, and then they're dragging yours down with them. So proceed with caution, but it's definitely a great way not only to help someone fix their credit, but if you have a situation where maybe you have an 18-year-old and you want to help them start building credit, you can put your child or your cousin or your niece or whoever on your account as an authorized user and help them start building credit without actually having them take on the responsibility of managing that if you don't think that they're ready for it. So just wanted to put that out there.
It's a really good point. And what you said about making sure someone you trust, at the end of the day, who are you hitching your wagon to? And if it's someone who's going to be pointing in the right direction, that could be great. But if it's someone who's going to go off a cliff, then you're going to go with them. So.
Absolutely. Okay, so I want to talk about some of the common misconceptions that you've seen in our community around credit. I think there's just so much like misunderstanding about like how it works and how to manage it properly. So what are some things that you've noticed?
Yeah, no, it's a good point. There are a lot of misconceptions about credit. I think we were talking about some of it at the beginning. And like I said, it's a tool, and as long as you're using it well, it can be a really, really useful tool. So one of the big misconceptions that I see a lot, that people ask me about a lot, is that people assume that if you have poor credit, a debit card or a prepaid card is the best option, which I get, because having a low credit score can make it really hard to get a credit card. But I don't think you should automatically assume that that's the best way to go. As I was mentioning earlier, I really think a secured card is a better choice. It works just like a standard credit card, except you have to put the security deposit down, and it's accepted in many more places. Nobody is going to be able to tell that it's different. Whereas, flight reservations, hotel bookings, they oftentimes won't accept a debit card or a prepaid card, whereas a secured card they will. So it's just a better tool, I think, for a particular type of person. It's a better tool all around. A second one, which is really important right now in the COVID era, is that people assume that their interest rate is locked in place and can't be changed. And I think that's been proven out actually to be wrong by statistical research. So if you have an existing credit card and you've been a good customer for a while, call them and ask, hey, can I lower my my interest rate? Can I lower my APR? There was a study that said that nearly 70% of people who called and asked for their interest rate to be lowered, if they've had a card for a while, got a lower rate. So it's as simple as calling and asking.
Wow.
The same thing actually applies with your annual fee. So I know, GC, over the podcast we talked about this, but it actually, even outside of the pandemic era is true, which is that if you call and ask, you can often get your annual fee lowered or even eliminated. I think the same research report said that I think 82% of the people who called got their fee eliminated or lowered, and I think of that, 31% was lowered and 51% was eliminated entirely. So pretty good. Worth a phone call.
Absolutely.
It can be 15 minutes being on hold and save you a few $100s. One more thing I'd say is that, and you definitely are an expert on this. A lot of people think that increasing your credit limit is a bad thing, and I get it, because you have a credit card, all of a sudden someone calls you and says, hey, would you like to raise your credit limit up a little bit? And it sounds like a trap, because they're trying to pull you into taking on more debt, and I get it. It looks like a trap, but again, it's entirely up to you whether you use that well or you use that poorly. You just look back to the components of a credit score and what goes in there. Having a higher credit limit, as long as your balance stays the same or is even lower, will get you that lower credit utilization ratio, and ultimately is going to result in a higher credit score. And it's not, maybe they're trying to find a better way for them to make money, but it can actually help you a lot.
Absolutely. So let's go through some more questions that are coming through the chat. The first one is, can you consolidate all of your credit card debt into one single payment? Would you recommend doing that? If so, how? So I'm going to give my personal take on this because I've done this before. So I have used balance transfers to do this. And so essentially what that means is that you take all of these credit cards that you might have like a couple $1,000s on each one at different interest rates, and you can find a card that has the ability to have a 0% interest rate for a fixed amount of time. If you're really lucky, you'll also find that they don't charge you a balance transfer fee to move over your balances. And so essentially what you're doing by doing that is, one, you're eliminating the interest that you're paying on this debt. You're lumping it all into one balance so that you're paying one payment a month versus sending money to a bunch of different creditors. And if you avoid the balance transfer fee, then you're not paying to move that money over. So that's like the best case situation. That's not very common to have a 0% balance transfer fee. Typically, you'll see like 3 to 5%. So what you have to do is you have to calculate the cost of transferring that balance versus how long it would take you to pay at the interest rates that it's currently on at the existing creditors. That's a good way to make it happen. So if you say, you know what, I found this credit card that gives me 0% interest for 18 months. I can pay this off in 18 months. I'm not going to carry over any balance after the promo period is over. I say make that calculation. You'll probably end up saving yourself a buttload of money.
Oh, yeah, it can be a huge money saver. And you're totally right that, I think balance transfer cards are popular for a reason. They have that long, no interest intro period. But, the second kind of piece of that question that I get a lot is how to do it. And so the first step, I think, is applying. If you can find a place where you can get pre-qualified, that's something that you can do on Crediverso. It's easy, as you said, that as we were talking about earlier, you then can get by with just doing a soft credit pull. So rather than doing a hard credit check on a bunch of different credit cards before you really can get an idea of whether you're approved. So apply for the card. You generally need a good credit score for the really good balance transfer cards. And by good credit score, I mean 690 or above. And one note to make here is that you can't transfer balances amongst cards between the same issuer. So if you have outstanding balances on 2 American Express cards, you can't then pull them all onto a third card. They need to be cross issuers. So the second piece is that you need to actually conduct the balance transfer. You can do it online or by phone. You just need the original account info and your new account info. It's pretty straightforward. The transfer itself can take a couple of weeks to go through. So a key here, and this can mess up a lot of people, is that you need to make sure not to miss any payments in the meantime. The last step is you pay down your new balance interest-free on your new card, which is the fun part. If I had to give one, personal finance tip on how to take advantage of balance transfer cards, is that you can actually, a lot of people don't know this, you can actually move personal loan or auto loan balances onto a balance transfer card. So if you're comparing the interest rate you're paying on your car loan or your personal loan, and the no interest for 16 months or 18 months on a balance transfer card is lower, as I imagine it would be, then yeah, take a look at bringing those on over.
I had no idea. Oh my gosh. Thank you for that.
Yeah.
Okay. That's fantastic. Another question we have, is there a suggested age to add a child to your credit profile if you wanted to do like the authorized user that we were talking about? I don't know. Is there a specific age that somebody can start building credit?
Yeah, so as most real loans, you have to be 18 to get. There are definitely credit cards out there who are designed for kids. I think Green Dot does a great job of putting some of those credit cards out there, and you can find some of those on our site actually. But that all said, I don't have any kids, and I would want to be the last one to give advice on when to start getting the kids onto credit cards. The one thing I'd say is that building those financial literacy skills early, I think, is huge. Even if it is a credit limit of $10 or $50, and it's, there are cards where it's really fake money that they're playing with, and you just fund it yourself. It all happens internally. Nothing ever gets on a credit score. Building those skills of, figuring out how much stuff is worth, being able to pay stuff back, I think that's really great to get people started on very early.
Absolutely. You are preaching to the choir, sir. Can people go on Crediverso to find out about balance transfer card offers that exist right now?
Oh, absolutely. We have a whole category on them. We have tons of balance transfer cards.
Excellent. And
the nice thing about being able to look at those is it is all in English and Spanish. We have how-tos on how to look at a balance transfer, what to think about. The piece of it that, I was never a personal finance guy before I got into this space. So there were a lot of these terms and conditions that I didn't understand. Balance transfer, I didn't know how to do that. So there is a glossary on Crediverso that showcases basically every financial term you can find out there that would be in the terms and conditions of a credit card, of a loan, if you're trying to send money internationally. Every term explains what it means and translates it to English, between English and Spanish, and explains it in Spanish too. So that's something
fantastic.
That's really helpful for me.
Love that. Okay. So what are some of the changes that you have seen among creditors that have been caused specifically by COVID?
Yeah, it's been interesting what's happened. I've been watching the news on this a lot. And the biggest impact I've seen is unfortunately one that affects us as the Latino community. I'd say probably negatively, but this is something we're trying to fix. Is that, as with many companies, a company that is having financial issues, one of the first places that they will cut their budgets is in the marketing budget. So, I mentioned at the beginning of our Instagram live here that even though Latinos make up 20% of the population in the U.S., the typical financial institution spends less than 1% of their marketing budget on reaching that audience. So that is actually also the first place that typically gets cut, is the multicultural marketing budget from within the marketing budget. So not only does the amount entirely go down, but the portion that was already less than 1% that was dedicated to multicultural marketing, that goes down too. So what that means is you see fewer commercials for credit cards and loans in Spanish and on Univision and Telemundo. You see fewer billboards, I have never seen an ad for a financial product on social media. And that's one of the things that Crediverso is trying to do, is get that information out there. So that's unfortunately one of the places where I've seen budgets get cut early. I think as I then look to the flip side of what's going on the consumer front, the landscape has changed a lot for consumers and how people do and can and should use credit cards. I think one piece of advice I give is definitely try to avoid taking on too much debt. It's very easy, think that now things have calmed down a little bit more, but a couple months ago, everybody was running to the grocery store and filling their shopping carts high with toilet paper, and putting that all in a credit card is tempting. But again, we've talked about why not having that huge balance is helpful. You don't have to pay an interest rate on it if it's lower. It's better for your credit score if it's lower. So that's kind of one thing. Second thing is missing payments. And if you'd like, we can go into, what to do if you missed a credit card payment. I know a lot of people have missed credit card payments recently. But the last one is try to avoid falling for financial scams. There have been a lot more coming up now. You'll get all sorts of nonsense phone calls from people pretending to be your bank or pretending to be, Social Security. And those have unfortunately really ramped up during the COVID era. So I generally try to tell people to avoid getting sucked into that stuff if they can.
Yeah, that's such an important point. And so we have a question that's come through that says, if someone is affected by COVID-19 and they've been deferring payments, will that affect them in the future from getting another credit card or a loan?
Sorry, Gis, you cut out for just a second. If someone is affected,
sure. Yeah, if someone's affected by COVID and they've been deferring their payments, will that have an effect on them in the future from getting like another credit card or a loan?
Yeah, that's a really good question that I think has been affecting a lot of people recently. So the good thing that a lot of these financial institutions have done recently is they've created these payment plans to try and work with the people that they're lending money to. So if you look at it from their shoes, there are basically two options. They can keep things really, really strict and make sure you pay the absolute, maximum that you could pay every month. Make it really hard for you to hit those minimums. But then, maybe you just say, screw it, stop paying, and then they don't get any money back. Or They can lower it down a little bit, work with you, lower your interest rates, defer some of those payments, and then they keep you as a client. They get much more of their money back that they loaned you. And then down the line, you're going to be able to pay it all back, presumably when, things pick back up, people get back to work. And I understand that that's not always the case. I know that the Latino community in particular has been hit disproportionately by COVID because we have so many folks in the service and hospitality sector. But what I generally say is the best thing you can do is call your credit card company early, talk to them, be honest with them, say, hey, here's what's going on. XYZ lost my job, whatever it is. I need to, I have this big medical bill to pay. Just be honest with them. They actually really appreciate that. And you can get on a deferred payment plan. What they typically will do, they will either lower the interest rate entirely, which in most cases won't affect your credit score, or they will defer those payments so that you can make them later. And again, if they defer those payments such that money that you would be on the hook for right now, you're still on the hook for it, but you get another 6 months or another year to pay it off, as long as you hit those payments later, then again, that's not going to affect you negatively for the most part.
Right. Yeah, I think it's just important to understand like what fees they're charging for. If you're deferring payments, are they still going to accrue interest on these balances? Is there a freeze on that? You need to just make sure you're aware of all the terms and conditions so that you're not surprised. You come down 6 months down the road and you want to pay your balance off and there's like an extra $500 in fees associated with your balance. So make sure you're checking that out. Okay, so I want to dive into this topic that I'm obsessed with, and that's probably why I have all these credit cards, like the ones that we talked about on the podcast episode. I am obsessed with travel hacking and like credit card hacking and points and all that stuff. So can you talk us through like some credit hacks or strategic uses of credit that you know of for people that are already comfortable using credit?
Sure thing. And the caveat I'll give is that these are the, we've been playing in the kind of new to credit, beginner space, and, just getting started on it. These are what I would call the advanced hacks. And so a lot of this stuff I think is mostly relevant if you really know what you're doing. You've got a bunch of credit cards like Denise, you know what they're all good for, and you know how to keep an eye on everything. You're good about paying your bills. So let me start with a couple of them that are pretty straightforward. I think everyone can start taking advantage of right now. So the first one is that always keep an eye out for whenever you can get free check back. So many credit cards now will offer free first check backs, but some will even offer free check backs for the primary card holder, and in many cases up to 8 traveling companions. That will make you really popular with all your friends. So just make sure that when you see a credit card offer for free check bags, that you know whether it's on any flight entirely or it's just on the flights that you redeemed miles through that card for. So that's one caveat there, and that's an easy thing to check for. Second is what's going on with foreign exchange fees. So, I mentioned that because we know our audience, that's a big thing that we focus on at Crediverso is cards that have no foreign exchange fee. Foreign exchange fees can be really expensive while you're traveling. You typically exchange your money at the airport, and some people, if you forget to exchange at the airport, then you're stuck at doing it at the hotel, or you have to go to a very touristy area to get a currency exchange booth. The fees are going to be upwards of 10%. So if you have a credit card that has a low foreign transfer or foreign transaction fee or a 0 foreign transaction fee, then that's going to beat that any day of the week. So, typically most cards that have foreign transaction fees are going to be 1% or so to exchange your money, but you can actually get down to 0 there in many cases, and that's a really important one for traveling. Another one that I think, especially on the travel front, can be useful is whether you can get an annual flight companion voucher. So a lot of credit cards, and they don't advertise this because it's, they're worried about people like you, Denise, who are and taking advantage of all the perks.
Right.
A lot of cards will offer an annual flight companion voucher just for keeping your card open. So basically every year that you have your credit card, you can get this voucher even if you don't spend any money on that credit card. You then get to use the voucher. Typical voucher is worth about $120. It's not going to get you everywhere, but yeah, it'll get you a quick flight to Vegas or down to Miami or something. And usually those are limited to just North America. Usually they're round trip, but they can save you a lot of money. Now let's get into the advanced topics. So, okay, there are 2 here that I want to talk about. One is called balance surfing, and one is called churning. So balance surfing. The idea here is that if you have a big outstanding balance on one of your credit cards and you don't want to pay interest on it, you can, every 12 to 18 months, you take out a new balance transfer card that has a 12 to 18 month no interest period on it. Once you're done with that 12 to 18 month interest period, you transfer all that balance onto another new balance transfer card that has another 12 to 18 month interest-free period on it. Now, here's the way I think about this one, is that I used to see in high school, kids would come up with all these really elaborate ways to cheat during a test, and they would have stuff written on the ceiling, on the inside of their water bottle, and they would spend all this time on it, and I would just think, hold on, why are you spending all this time trying to cheat? If you just spent half that amount of time studying for the test, you'd probably get a way better grade.
Right.
So this isn't cheating. Balance transfer is not, balance surfing is definitely not cheating. But I don't know. To me, put the energy towards paying down the balance. There certainly are uses for it, and I think it's can be very useful if you're doing it right. But it's dangerous. So if you're canceling credit cards all the time, you may miss. If you're not watching it closely, it can get out of hand. So just keep an eye on it. If you are very diligent about it, it can be really useful. But you have to keep an eye on it. The last one is very similar. It's called churning, and the idea behind churning is that it applies to that term applies to the practice of opening a new credit card, qualifying for the welcome bonus, using the points, and then canceling the card and doing the same process over again. So the thinking behind this is that credit card issuers are the most liberal when with their perks and the rewards that they give you when you are just applying and opening the card. They basically want to pull you in, because then once they get you in the door, then it's generally all profit for them. So people try to take advantage of this by opening a card, getting all those points, spending them, canceling it, doing the same thing over again. Again, if you're really careful about this stuff, then it can be beneficial. I don't recommend it. I think it's worth, it's way bigger headache than it's worth. It can get you into trouble. But that's when I talk to personal finance folks who really love gaming the system, churning is one of the things they like to do.
Absolutely. Proceed with caution, y'all. This is like next level stuff. This is not like get your first credit card and then start trying to do all these hacks, because you're going to stress yourself out, and you might just get into a situation where you're like, oh my God, I charged so much money just to get these perks, and now I can't even pay this back. So don't do it.
I don't do those two things, just so you know.
Oh my gosh. So Carlos, this conversation has been amazing. Thank you so much for being here. If you could just give everybody a quick recap on Crediverso and where we can find you and find out more about the company.
That's really nice. It's been a pleasure to be here. So Crediverso is, as we mentioned at the beginning of the Instagram Live, it is the nation's first online financial products marketplace that is dedicated for Latinos, built by Latinos for Latinos. Everything is available in English and Spanish. We have content that is written in a way that is appealing to our audience. And what you should go to Crediverso for is if you are looking to get a new credit card and you want information about what the really transparent, easy to understand, visible information about what the best annual fees are, the interest rates, how to do a balance transfer, things like that. If you want to get a new loan, if you want to get a free credit check, that's something that we can do on our website, and it's very easy. We show you all the best ways to do that. And then I think the one that I'm really excited about as well is I think a lot of people on this Instagram Live and in your audience and your listenership, Janice, are sending money internationally all the time. And so we offer the only place where you can compare all the different options to send money internationally down to Latin America. And that's really useful, because those rates, there's a foreign exchange fee, there's a rate that the provider charges, and they change constantly. So even if you go and you do all the research and you figure out which one's the cheapest right now, in a minute, I can almost guarantee you that they may not be the cheapest anymore. So you can compare all the options, see how fast each one is, what the end amount of money is that's going to get into the pocket of the person you're sending it to, and then conduct all the transaction right there. So basically the idea behind Crediverso is that we are giving you all the information you need so that we can start putting more money back in your pocket right now.
I love it. Carlos, thank you so much. I cannot wait to see how you guys continue to flourish and the impact that you're going to have on our communities. I wish you and the team so much luck. And we need to do this again, because this convo was great, and it was such a pleasure having you here. Thank you so much.
I learn stuff from you every time we talk, so I'd love to talk again.
Thank you. Bye, everybody.
Bye, everyone.